Coming up on Market to Market, the trade war drumbeat grows louder as deadlines approach. Rains inundate key growing regions with a vengeance, taking more than just the cream off the top to make a profit. And market analysis with Don Roose. Next.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, June 22 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. The economy continues to grow even as a trade war looms. The dust-up has yet to derail many from purchasing big-ticket items like a new place to live. Sales of new homes grew 5% last month as the job market strengthened. Sales of existing homes fell 0.4% as the pool of properties continues to shrink and discouraged buyers stopped attending open houses. Declining farmland values have forced an increasing number of banks to ask for more collateral on farm and ranch loans. In spite of this change, the Rural Main Street Index remained just above growth neutral for the 5th straight month. President Trump's unilateral trade moves have rallied other nations. The European Union has joined the fray by putting tariffs on $3 billion of U.S. goods. China has already called the president a bully who is swinging the big stick of unfair trade tactics. No matter how you slice it, a showdown is coming, and neither side looks like it will blink. Paul Yeager reports.
President Donald Trump upped the ante in the trade disputes with several parties, including China, the EU, and NAFTA countries. Trump traveled to Duluth, Minnesota this week and spoke on current events, including trade.
But I want to say, and that we have to do that because it has to be balanced, it has to be fair. It wasn't fair.
Last week, Trump moved ahead with plans for 25% tariffs on $50 billion in Chinese goods in response to Beijing's forced transfer of U.S. technology and alleged intellectual property theft. All told, the scope and tariffs issued would be the equivalent to 90% of the goods that China shipped to the U.S. last year.
Here are surging exports from China.
Yukon Wong, a fellow with the Carnegie Asia program, says the row between the U.S. and China is built on false assumptions, which could lead to policies damaging to both countries.
It began with the view that trade deficits are an issue, and they're not. It began with the concern that there's too much American investment in China, when actually it's the reverse, is too little. So part of the reason why you have this, what I call a trade and technology war, is that both sides actually see the problem from a different angle.
The tariff actions taken by the president are necessary to revive America's essential steel and aluminum industries. They have been harmed by imports to the point that allowing imports to continue unchecked threatens to impair our national security.
The president's Commerce Secretary, Wilbur Ross, appeared in front of the Senate's Finance Committee. A bipartisan group of members gave the Commerce Secretary an earful on the impact of the tariff talks.
Mr. Secretary, as you consider these tariffs, know that you are taxing American families. You are putting American jobs at risk, and you are destroying markets, both foreign and domestic, for American businesses of all types, sorts, and sizes.
The administration's trade moves seem more like knee-jerk impulses than any kind of carefully thought-out strategy. Its most obvious accomplishment on trade so far is sowing a lot of chaos that has united allies in China against us.
One of the first counters made by China was aimed at U.S. agricultural products, including pork and soybeans. The EU announced a 25% tariff on imports of U.S. corn over import duties placed on steel and aluminum from the EU. The EU published its full list of planned tariffs on U.S. goods near the end of the week that ranged from motorcycles to bourbon. Iowa farmer and Senator Charles Grassley says on 3 occasions he went to the White House to warn the president about this tactic.
I'm not going to tell the farmer that he should have faith that this is going to work out okay. I'm very nervous about it myself. Farmers are nervous about his approach. Now, if his approach is successful, in the end, we'll be better off. But if he's not successful, you're seeing the results of it already.
China is the largest importer of dairy products in the world market. A 25% tariff has been proposed on a wide array of U.S. dairy products. Former USDA Secretary Tom Vilsack, now with the U.S. Dairy Export Council, says this back and forth is heavily impacting the 41,000 American dairy producers.
They need to basically watch the discussions or lack of discussions that take place between the U.S. and China, for example. They need to pay attention to whether or not this is escalating or whether or not there's a genuine effort to de-escalate. I think the administration is making the assumption that these tariffs will hurt China more than they will hurt us because of the size of the deficit. But I think China understands that they can play the long game. They're a much more patient country.
For Market to Market, I'm Paul Yeager.
According to the National Oceanic and Atmospheric Administration, last month was the warmest May on record. It was hotter in some places more than the Dust Bowl era of the 1930s, while heavy rains plagued other parts of the nation. This month has been no different. Peter Tubbs has more.
Heavy rain brought flooding to the Texas coast, and nearly the exact same areas still rebuilding from 2017's Hurricane Harvey. 5 to 10 inches was commonplace along the edges of the Lone Star State, with pockets where up to 14 inches filled rain gauges. The upper Midwest also saw steady rain this week, with 2 to 4 inches across Iowa, Minnesota, and Wisconsin. A few isolated areas picked up 8 inches of rain that pushed streams out of their banks and flooded nearby farm fields. Northern Wisconsin had significant flood damage from rain that fell on already saturated soils. Floodwaters may have caused a 31-car derailment that sent crude oil into the Little Rock River in northwest Iowa. Despite growing drought in Kansas, the surplus of moisture across the grain belt helped push commodity prices down for the week. A pattern of showers and thunderstorms is forecast for the next 7 days across most of the eastern half of the country. For Market to Market, I'm Peter Tubbs.
The U.S. is the world's top producer of milk. Next year is expected to be a banner year for exports as the world continues to produce record amounts. Even with the prospect of increased exports, milk prices continue to languish below the price of production. There are those who have ignored the normal marketing chain and taken a different tack to profitability by skimming more than just the cream off the top of every pound. Peter Tubbs has our cover story.
Craig Station Creamery sits in a western New York valley 50 miles east of Lake Erie. The operation runs like most cooperatives, where daily deliveries provide milk to be processed into products for sale. But Craig Station has opted to shift away from pouring their output into conventional product streams and, instead, take an aim at the high-end food market.
With Craig Station Creamery, it allows for the farmer to engage in a practice where they have a business that will allow sustainability within their own business model. This was built to perpetuate the farming industry for the generations to come after those farmers have gone and their families are here. They want them to be able to continue on in their footsteps.
To smooth out the swings experienced by the commodity milk market, Craig Station follows a production regimen that creates proteins that are desired by makers of premium brands of cheese, butter, and ice cream.
When you separate milk using cold boil techniques, it allows for the milk to remain in a purer form so that you're not denaturing proteins, you're not doing anything to the milk that would occur if you were to heat that milk up.
The move away from sending their output through normal channels has given co-op members better financial stability, but has required an increased amount of coordination. Paris's role as plant manager is unique in the cooperative setting. Typically, 1 or 2 cooperative members act as plant managers in addition to operating their own dairy, but the added duties can overwhelm part-timers. A full-time manager like Paris can handle the needs of the processing facility, which allows the dairy owners to focus on their operations.
Probably the favorite part of my day is interacting with the farmers. They're simply great people, and anytime you work with people of this high caliber, it makes your day better. So I look forward to that more than anything else. Probably working with the farmers and the farms and being around the animals are my favorite parts of the day.
Craig Station Creamery was formed in 2013 and opened its 14,000 square foot plant the following year. The operation processes 1 million pounds of milk each day. The cooperative's mission statement includes a sustainability and environmental responsibility component that is given more than just marketing lip service. All of the manure and organic waste generated by Craig Station is processed in a bioreactor. The feedstock also includes wastewater from the farm and creamery. The annual output, 450 kilowatts of electricity, handles all of the creamery's energy demands with enough left over to power a neighboring dairy. And Craig Station goes one step further, taking delivery of tons of food waste from food manufacturers and packaged goods that can no longer be distributed to consumers. The waste travels less than 100 miles to Craig Station before being digested. Specialized equipment is used to separate the organic solids and liquids from the packaging. The feedstock allows for extra energy to be captured through processing in the bioreactor. Growing demand for high-quality food is driving a $50 million expansion plan for the co-op. Through a partnership between the Danish dairy cooperative Arla Foods and Dairy Farmers of America, Craig Station will be taking some of their output and making cheddar cheese for the American market. Craig Station plans on sticking to their business model to stay fluid into the future.
There's always greater strength in numbers when it comes to a joint venture. And so these 8 farmers are much stronger as 8 as opposed to 1.
For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
The commodity markets were again dominated by tariffs as the trade sold the rumor and bought the fact, albeit with a little less volatility. For the week, July wheat fell 8 cents while the nearby corn contract dropped 4 cents. Chinese tariff threats were combined with actual Mexican and European duties putting pressure on the soy complex. The July soybean contract lost 11 cents, putting the 3-week decline at $1.27. July meal rose 20 cents per ton. In the softs, December cotton continued to shrink, losing $4.55 per hundredweight. Over in the dairy parlor, July Class 3 milk futures lost 71 cents. The livestock sector was mixed as the August cattle contract added $1.12, August feeders put on $1.22, and the August lean hog contract shed $2.87. In the currency markets, the U.S. dollar index fell 27 ticks. Crude oil gained $3.73 per barrel. COMEX gold melted $7.80 per ounce. And the Goldman Sachs Commodity Index grew more than 7 points to settle at 470.75. Joining us now to offer insight on these and other trends is one of our regular market analysts, Don Roose. Don, welcome back.
Thank you, Delaney. Glad to be here.
Don, we've had quite the week this week, and of course, I think a lot of producers are concerned about the tariff threats now, so we're going to take a social media question, a great one that came in this week off the top here. We have Tim in Crookston, Minnesota. He said, with all the geopolitical turmoil and trade wars going on right now, what can a producer do?
Well, you know, the markets are always volatile, and we always say, you know, prepare for the unknown, and we certainly have the unknowns ahead of us. But from a producer standpoint, it doesn't look like there's an opportunity on the grain side to put on new negative positions to do much risk management down here. But if you're a producer and you're concerned, we're at some insurance levels that are profitable now. You can buy some upside insurance protection, so I'd say you can do that. But otherwise, I think the market at the end of the week went home with a spike low that we had on Tuesday, very oversold, down at some levels where we had a buy signal on some oats, which sometimes we say oats knows. So I think that when you look at next week, it's going to be very critical. It's a market that could easily turn to the upside. We don't have much risk premium built in for weather, and we certainly have an awful lot of negativeness built in for some problems from some tariff talk. So no opportunity to make new sales here, but maybe protect some upside insurance protection.
Definitely, and we'll get to that a little bit later as we move through the grains here. Let's start with the wheat market. We've had a lot of pressure going on with harvest. We've got harvest going on in the plains and Texas. As we're going through harvest for winter wheat season, are we going to see some seasonal pressure, and how will these issues affect prices moving forward?
Well, you know, the wheat is very much like some of the other grains. We had a big spike low on Tuesday, and we're at an area that we're trying to just stabilize and see if we can turn into the upside on the buy signal. But, you know, usually at harvest time, it's not an opportunity to make new sales, and I think this is no different. We have some real issues around the world. Russia has a crop that continues to get smaller. They're the big price setter for the world on wheat. And I think we have to remember that the world exporters are basically, the supplies are pretty tight. China holds about 50% of the world reserves, and those are not sellable into the world market. So it's a market that could easily move back to the upside here, and post-harvest rally is probably a better opportunity to make some sales. You know, as you get closer on July, wheat closer to maybe up around that 550 area.
Really quick here before we move on to corn. With that being said, we've had some weather issues. Wheat's ending stocks are pretty high. How much of a significant weather event are we going to need to see those ending stocks pulled back here?
Well, you know, I think when you look at it around the world, almost everybody's had some kind of a problem, and our world supplies have been coming under pressure. You know, the U.S. is one of the few areas that we've had a big supply, a good supply. Australia has a short supply of wheat, the production with the drought that they have. So I think you're going to need some weather issues, but the U.S. is only 7% of the world market, so I think that there's some chances to have some weather problems down the road.
All right, let's talk about corn. We had the marketing year low in for export sales this year from corn. Was that just a one-off week because of what's been happening in the trade and tariff news, or do you think that we're going to continue with that export pace?
Well, if you look at the export pace, we basically sold up around 96% of our total sales for the year already. And we're about on target with both this year and next year for sales. So, you know, so far we really haven't been affected yet at the present time. So, you know, I think our export pace, the supplies and world supplies are pretty tight on corn. So I think that the exports probably improve a little bit down the road.
When we look at a price perspective here, the December high has been put in May. Is that going to be the marketing year high this year?
Well, it very, very easily could be. I mean, this is the fourth year in a row that, you know, the opportunities was early in the year to make some sales. Again, this year, 429.5 double top. And the only thing that's different than the last few years is we have some supplies that are really pretty tight in the world. We're down 1.5 billion bushels versus a year ago on world ending stocks. And in the U.S., it's very uncertain yet with the weather. Things can change greatly going forward. And you know, I would be careful. There's no opportunity, again, just like the wheat, to make new sales here. Anything changes with the weather, anything changes with the tariffs, you know, you're going to get a market that can move to the upside.
And with that being said, have we put in the low for corn as well?
Well, we thought actually December corn with a big crop, you know, somewhere around 176 yield. We thought that we could probably test the 355, 360 area in the fall. Well, we went down to 360 on new crop corn. So, you know, it's quite possible that we have. I mean, I've seen it over the years that when you get news like we had on Tuesday, it's what we call a blow-off bottom. Mm-hmm. The news is so bad, it's an all-out situation, and you know, that's really what we had in just a situation that can easily be the low. We'll see.
And it's definitely been big news in the soybean market. I want to take one more quick social media question here, because I think it's a great question that a lot of producers are also sitting at home and asking. Matthew in Ontario, Canada said, with the 25% tariff on soybeans, how does the tariff end up being distributed between the U.S. farmer and the Chinese consumer? And then secondly, is the current soybean price the true price?
Well, the one thing, the futures market always dials in the real price, and that's my experience. So yeah, it is getting dialed in, and probably at that, when we went down into 864 area on November beans, that was probably dialed in as far as all the negative news. But, you know, I think you have to ask yourself, are we going to really lose overall world trade? Or are we going to see the trade just shift around? Is China really going to buy less beans for their people? Probably not. So I think what you're really going to find is that maybe we don't sell directly to China, but maybe Brazil buys from us and they sell to China. And by the way, we've seen Brazil and Argentina both be aggressive buyers from the U.S. this year.
Right, and speaking of Brazil, their soybean crop is at a premium right now, which I think equivalates somewhere near that 25% tariff level. Is that enough to see some interest and spark exports in U.S. beans?
Well, I think it is, and I think that's exactly what we're talking about. Is the world shuffles around and the price adjusts around the world, and if you look at it, we've had a price swing from top to bottom on soybeans. What, about 18%?
Mm-hmm.
That's about what a tariff is. So let's see how it shakes out. But I think overall, I don't think we lose a lot of world trade, and I think hopefully the whole strategy works out to our benefit from a producer standpoint.
Really quick here, before we move on to livestock, we haven't really heard a lot about the acreage reports coming out next week. Do you think we're going to see anything big come out of that port, either acreage-wise or quarterly grain stocks-wise?
Yeah, we have two of them next Friday, and on our acre estimates, we're up 400,000 on corn. We were up 350,000 acres on soybeans, so we think they'll grow a little bit. I don't know. I think that's kind of dialed into the market, so I don't think that's a big surprise. Mm-hmm. Same thing on stocks. Our estimates were up about 30 million on corn, not a big deal. And on soybeans, we're up about 230 million. I think what it says on beans is there's still a lot of old crop soybeans around, but that tightens as we get into new crop, but we'll see what the yield is.
All right. Well, we had the cattle on feed report come out on Friday. We had higher placement numbers than expected. What does that mean to you when you're looking at the trade?
Well, I think what it says, there's big supplies ahead, and the report really confirms it. And by the way, the cattle on feed, that's an all-time record. So we haven't had this many cattle on feed during this time frame on history on the reportable numbers. So we have big numbers going through. On top of that, the cold storage report also came out, and it had beef and cold storage up 13% over a year ago. I think from a feedlot standpoint, you have to make sure that you stay current, because if we lose our currentness, the packer really has the advantage. So we're dialing in 105 on cash cattle right now. That we could have a low 102, 103 on the cash. The upside, we still stay bearish on rallies from risk management standpoint.
So moving forward, do you think that we will have a lower cash price, or do you think we'll remain steady at these prices?
Well, I don't think the Chinese tariff situation is going to affect the beef like it is the other things, because they basically don't buy beef from us. So I think we're really it's really up to the consumer, and it's up to the price. And if the cutout comes down enough, I think maybe we'll continue to consume. But remember that April, May, June are the best demand months of the year, and July and August are the worst of the year. So you have to make sure. I think rallies are going to be hard fought. You get August cattle up around 108, 109 are probably sales. And don't forget to look at those deferred cattle. $3 and $4 rallies are probably catch-up risk management opportunities. You can use some window contracts to give yourself some upside potential also.
When we look at the hog markets, it seems like it's been the opposite story here. We've had the tariff news from the European Union, from China, potentially from Canada and Mexico. The hog market doesn't really seem to be reacting, though, and why is that?
Well, I think the hog market has some negativeness dialed in on it longer term. Short term, it's all about the demand, and I don't think the tariffs are really affecting anything here so far from that standpoint. But you really have an issue with the hogs because we have big supplies coming at us. For example, production in the third quarter is going to be up over 4%. When you get into the fourth quarter, it's going to be almost up 6%. The first quarter up another 2%. So you've got numbers coming at us. 25% of our hogs are exported. Mexico buys 27% of the hogs, China 5%. So I think that's one also that you have to stay bearish on rallies. $3 to $4 rallies or catch-up risk management opportunities.
So if we get a $3 to $4 rally, definitely be looking to make some sales.
Yeah, I think you have to, because it's a high-risk situation with the tariffs. and also with the big supplies. And what the government's really saying is that our exports are going to be up 6% next year and another 4% the year after. That might be hard to do. So far, exports this year are only up 1%. So if we can't export it, it goes back into the domestic channel, and the only way you can move it is through lower prices.
Absolutely. Well, Don Roose, always a pleasure.
Thank you, Delaney.
That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. Check out our YouTube channel. Tell everyone you've subscribed at youtube.com/market-to-market. Join us again next week when we explore what legislators and lawmakers are contemplating for the future of ditch mowing. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.